What's going on YouTube? Jake Unfiltered here. Today I'm going to talk about ARK ARK Innovation ETF. Okay, so let's check it out. It's been around for about 5 years and it's made a total of 25% in their ETF over the lifetime of the fund. So they definitely started investing in these companies way back when. I don't know if they added or did anything new to their portfolio, but in the last 52 weeks seems to be down a lot. So this is the 52-week range. So these unprofitable companies are not doing very well on the ARK Innovation Fund. Let's look. Okay, so Tesla is profitable. Tesla has a net profit margin 11.76%. Their revenue is $13 billion, and out of that, their net income is $1.62 billion. Okay, that's a pretty good company to be on the top 10 holdings. Roku makes a net profit margin of 10% a year. But they did crash recently, and I think that's because the pandemic is over. But, I mean, if you did invest in ARK Invest back in the day, you'd be doing pretty good. But if you invested in it during the hype, which is when everybody started investing in these companies, if you would have invested in February, you would be broke as shit right now. You would have lost all your money in this ETF. You would have lost hundreds of dollars, right? So let's look at number 2. TDOC is negative 16.17%. Profit margin negative 84 million, revenue 521 million. This company is losing money and it just popped. Zoom, let's check out Zoom. So TDOC is losing money. Let's see what Zoom is doing. Zoom is making money, so I could see this being on the top 10 list. I mean, you need a stronger company than this to hold up your ETF. Coinbase. Now, if she would have invested in Coinbase whenever it first came out, like, she would have just lost a shit ton of money. So it started out around $400, dropped all the way down to like $200. Now it went back up for a little bit, and now it's back down. Okay, this company is making money. Their net income is $406 million, net profit margin 30%, revenue $1.31 billion. Unity, this is also in their top 10. Their net profit margin is negative 40%. Their revenue is $286 million, and their net income is negative $115 million. Spotify. Okay, let's see what Spotify's doing. Their revenue is $2.5 billion. Their net income was $2 million. Their net profit margin was 0.08%. So they're not really doing the best because in June quarter they lost $20 million. They were up net income in March, $23 million, negative $125 million. They do have a good revenue growth. Twilio, they are negative 30% net profit margin, negative $224 million net income, revenue $740 million. At least they're making a revenue. Exact Science Corporation, they are number 8 on the list. So they are losing negative 36% net profit margin, negative $166 million net income, revenue $456 million. Path stock, so this is the last one on the list. Negative 55% net profit margin, negative $122 million, revenue $220 million. Okay, so do you see like a pattern here, right? So I would say half the stocks on their top 10 holdings are losing money. I wouldn't really want to put a company on the top 10 holdings that's losing money. So if you go to like other ETFs like SPY and you go to their top 10 holdings, it's all profitable companies. Apple, Microsoft, Amazon, Google, Tesla, Facebook, Nvidia, Berkshire, United Health Corp. So all these companies are making a boatload of money. So I'm thinking like if ARK Invest would put all these stocks right here, fucking put those on your top 10 holdings, okay? And then put these losing money stocks down, like all the way down here at the bottom, where you're only putting like 0.87% of it into your ETF, and then put all the best companies on top. Like, she's putting these negative, like these companies that aren't making money yet. I mean, I'm sure one day they're gonna make money, okay? But she's putting all these on top whenever they should be at the bottom, and better companies should be on top. You know, like these top 10 holding companies are the companies that hold your ETF up. Like, if any of these top 10 companies like do horrible, your ETF is going to crash, and that is exactly why ARK Invest crashed, because the companies that are holding it up are crashing. Like, all the stocks that are holding up are crashing. But not Apple, not like Tesla is a good company. It definitely held it up. But if you're on SPY, like these companies right here, this holds up the entire S&P 500. It's 29% of their portfolio. Let's see what it is for ARK. This is 50% of their portfolio. Like, you can't be doing that. That's why it's crashing right now. And I mean, the only way for it to go up is if these companies go shoot back up to the moon. I mean, if you like average down, if you already bought into ARK and you keep averaging down, then yeah, you might be able to go back up one day, and I really hope that it does. I hope that everything works out for these companies. I hope that it's a good innovation company. I hope that they all start becoming profitable, and I hope, you know, all these companies succeed and everybody makes their money, because like nobody wants to buy into an ETF and lose their money. You know, like ETFs are supposed to hold up your money for like retirement, but there are a lot of volatile ETFs like the Metaverse ETF, ARK Invest. They're all crazy, you know. But if you would have invested in it like back in 2015, 5 years ago, you would be in profits, because it was only $20 a share, and it just shot up. I feel like this shot up really fast for an ETF. But I think these companies are really hyped up, and hyped up companies, they like whenever they go up to the moon, they tend to fall really fast too. And nobody realizes that as it's going up, because everybody's like, oh, it's going to go forever. I mean, over time, you're going to see that these companies will fall back down, but everybody's learning their lesson right now. All these new people like me, like you, or maybe you've been in the stock market a lot longer than I have, but I learned my lesson. A lot of people are learning their lessons. Some people may not have learned their lesson, but if you watch my video, maybe you can get an understanding of what happens to these companies whenever they shoot up too fast and they get hyped up. I personally, I don't even want to invest in a company that these YouTubers talking about, because those are the companies that get hyped up and then they go to the moon and then they fall down to the ground eventually, because they're overhyped companies. I want to invest in a company that's not overhyped, that not everybody's talking about. Maybe one day they will talk about it, and then you'll be good. I would honestly, I think every ETF, like they should just like put these top 10 holdings like in the S&P 500. They should all be in their top holdings. Maybe get like, you can switch around the amount. Like if there's no Apple in this, is there Apple in here? Yeah, like I feel like Apple should be in here, because like there's just too many companies in here that aren't making money yet. Like Palantir, they're not making money. CRISPR, I don't know, are they making money? Look at Square stock, this is in there as well. This one is a 0% net profit margin, but they are making a little bit of money. They're making some revenues. So CRISPR stock is net profit margin is negative $15,431. Their revenue is lower than their net income, right? So normally the revenue should be higher than the net income. Oh my God, this is insane. This is freaking crazy. They made 370K and their net income is negative 177 million. They're like, this is in December 2021. Their net profit margin negative 28,000, pretty much negative 29,000%, negative 20,000%. Ooh, look, they made some profit in June 2021. Their revenue was a little higher than their net income. 900 million revenue, net income 759 million, net profit margin 84%. The rest of the quarters, they're negative 15. How do you go from that to that? How do you go from 759 million to negative 127 million? How do you go from net profit margin to 84% to negative 15,431%? This is why this stock crashed. Like, you gotta look into these things, because like if you were to look at the June quarter, you can be like, oh my God, they're starting to make money. But as soon as the third quarter or whatever comes out, you notice they're making negative 15,000%, and everybody's gonna sell out, and they're putting this in their fund, which is smart that they put it down below the top 10. But I think that the top 10 should have some very stable companies in it, and that's just all I gotta say, man. Personally, I wouldn't invest in it, okay? But if all these companies start doing well one day, if I do invest in it, what was it before it shot up in 2020? I'd wait for it to go back down to like $40. Okay, it seems like everything right after the crash, everything just shot up to the moon. Like, it's insane. For how much it shot up to the moon, I think that it's kind of a bubble right now, because there was so much money thrown into like the market, and there's so much money thrown and all the stimulus money thrown into the people's hands. Like, millions of people started investing that in the stock market. The unemployment money they were giving away, they invested it in the stock market. It really caused it to shoot up, but people aren't getting these stimulus checks or unemployment checks anymore, and now the stock market's crashing. Like, this is like the speculative stock market right here, ARK Invest. This is every stock that we bought during the hype phase of 2021. They're all crashing. This is literally it. Buy, look at that. It's always a steady incline because they have good profitable companies on their top 10 holdings. Facebook's undervalued. That thing is going to keep going up. Anyways, please like, subscribe. If you enjoyed this video, please give it a thumbs up. Let me know what you want me to talk about. I will make a video about anything you want me to talk about. And yeah, have a nice day. I hope you enjoyed the video.